And it's the second trading day of November 2023, 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever the world you're watching from, you're watching Business Morning live from Channels HQ right here in Lagos. Let's get to the top stories now that set your agenda. We see business activity in Nigeria has contracted for the first time in 7 months this year. That's according to the latest monthly Purchasing Managers Index, as PMI report by Farmers Financial Institution, Stanbic IBTC. The October edition of the report shows that the headline index dropped below the 50-point mark to 49.1 last month from 51.1 points recorded in September, signaling a worsening business condition in the private sector. The decline, which comes as the country's inflation hit a new peak in Stanbic IBTC's survey and depressed customers' demand. At the same time, the level of new businesses dropped at a solid pace, ending a 6-month series of growth, while business activity also slowed down, following a second time in 3 months. Still, with the report, the impact of lower new orders and high input prices led companies to cut activities, but increase in outstanding business was reported last month. Meanwhile, the level of staffing rose for the 6th month in a row and at a strong pace, while the delivery time of suppliers improved due to competition among themselves. And to the global oil market now, see oil gained more than 1% today to snap its 3-day decline as risk appetite returned to the financial markets after the U.S. Federal Reserve kept benchmark interest rates on hold. Brent crude futures rose 89 cents, about 1.1% to $85.52 a barrel, while U.S. WTI intermediate crude advanced 91 cents, about 1.1% to $81.35 a barrel. Both benchmarks settled at their multi-week lows in the previous session. Oil's rally comes along with gains across financial assets after the Fed maintained its benchmark interest rates unchanged at 5.25% and 5.50% at its latest meeting. That was yesterday. See, policymakers struggle to determine whether financial conditions may be tight enough to already control inflation, or whether an economy that continues to outperform expectations may need a little more restraint. And to the global grains market now, see Chicago wheat futures rose today after Russia allegedly dropped explosives in the Black Sea grain shipping routes, while traders looked ahead to harvest hit by dry weather in Argentina and Australia that are likely to tighten supply over time. Soybean prices also rose while corn dipped. The most active wheat contract on the Chicago Board of Trade, WV1, was up 0.2% at $5.62 for 3/4 of a bushel, moving away from September's 3-year low of $5.40. CBOT soybeans SV1 rose 0.4% to $13.19 for 3/4 of a bushel, while corn CV1 fell 0.1% to $4.74 for half a bushel. And to other stories now, the UK government, through its development finance institution, the British International Investment, has signed a $26.5 million deal with Africa's leading commodities platform, Afex, to address the challenges of food security in Nigeria, Kenya, and Uganda. The deal, which was announced yesterday at an event attended by the British Deputy High Commissioner in Lagos and top management of Afex, comes as part of efforts to support Africa's Agric sector and benefit smallholder farmers on the continent. Our correspondent, John McCoy, had the report.
The president has declared a state of emergency on food security.
About 4 months after President Tinubu's led administration declared a state of emergency on food insecurity, the private sector and international bodies have begun keying into different stages of the food production value chain to make insecurity a thing of the past. The British government is interested in empowering smallholder farmers by boosting storage facilities to minimize post-harvest losses. Working through the British International Investment in collaboration with Afex, a commodities exchange in Nigeria, it is committed $26.5 million.
Thanks to the investment being announced today, Afex will be able to build 20 modern agricultural warehouses in strategic locations in Nigeria, Kenya, and Uganda. And this will allow smallholder farmers to have better control over the quality of their harvested crops, which boosts their access to markets while also creating job opportunities within local communities. A portion of this funding will also be used to develop a soybean processing plant in Ibadan, which, as you will know, is an important hub for Nigeria's economic development.
It's been a long road to this moment, but finally the agreement is sealed and binding. Now it's time to work.
Some of these investments, we've started to build, so they will come on stream as early as our Q1. Second is about, the national pride of we want Nigeria products to be the best quality, the best nutritional value across the world. And third is we want markets to work.
With post-harvest losses claiming about 50% of agricultural production in Nigeria, investment in storage and preservation facilities is expected to turn the tide and allow the spread of harvest through most part of the year. John Mekwa, Channels Television News.
And now to our first conversation. Nigeria, Africa's largest economy, ranks third in the continent in vehicle manufacturing after South Africa and Morocco. See, data from the National Bureau of Statistics shows the value of imports of used vehicles reached 728 billion naira, up 708% in the second quarter of 2023 compared to the same period in 2022. Now, let's discuss the potential for made-in-Nigeria cars. Joining us for this conversation now is Ajayi Oluwatobi, Chairman, CEO, Nord Automobiles Limited, joining me right here in the studio. Great to have you on the show. Good morning.
Thank you. Thank you for having me.
Yeah, so it seems everyone seems to be fighting for your industry. At this time, we're seeing,
nice to see.
Yeah, a lot of vehicle purchases coming up, for the government. And, yeah, we heard from Senator Sunday Karimi last month. On Politics Today, he did talk about, durability and costs. Let's take a moment now to listen to that, what he had to say on Politics Today. Take a listen.
As time goes on, is that patriotism?
As time goes on.
You swore to be patriotic to Nigeria. Is that patriotism, Senator?
At the same time,
if you are doing this for Nigeria, for the purpose, for lawmaking of Nigerian laws, for Nigerian people, and you are buying almost 500 vehicles, and you are patronizing, you are taking Nigerian money outside of this country, is that patriotism, Senator?
I've just said something, Shion, that as we develop in terms of quality and all that, we are going to patronize Nigerian.
Yeah, so there you have it from Senator Karimi there. It says as quality, he's talking about quality there, durability, and also price of Nigerian-made vehicles. And I'm wondering, how do you prove durability of cars made in Nigeria? You're a manufacturer.
So it's sad. I made some tweets some weeks ago about this. It's really very discouraging to see something like that coming from our own senator. But for quality, I've already said it, and a lot of our customers in Nord can testify to this. That question is solved. The quality of question should not be a problem. I can agree when you talk about maybe brand equity and the rest, but quality is fine. Because, okay, how do you get a vehicle, a very good vehicle, quality vehicle? How do you make a quality vehicle? There are three major things. Number one is the quality of the individual components and parts used in making that vehicle. One, that's the quality of the brake discs, the suspension, the transmission, the engine. Two, the production process. Three, the quality of the people. How experienced are they? How much expertise do they have? Now, for this, the production process and the people, we've solved this because, like the auto industry is an industry that is over 100 years old. The technology is not new, and it's decentralized already. If you have the demand, you have the capital, you can actually get the best production process and the people. Now, I'm talking about the parts, the quality of parts. We get our parts from some of the best and biggest OEMs anywhere in the world. So your biggest brands, your most popular brands, actually get their parts from the same places we get our parts. So you are going to get the same thing you're not going to, if I buy engine from this place, you buy engine from the same place, you're going to get the same performance and quality from that engine. And these are the things that we bring together to make the vehicle. So our vehicles, and our customers can actually testify to this. We have some of the biggest customers. We have our vehicles in the transport industry doing 20,000 kilometers every month. We have vehicles that have done 20,000 kilometers every month for more than 3 years. They're still on the road. You can ask transporters.
But one thing I've noticed, definitely, the federal government is required to lead, when it comes to, buying Nigeria. It'd be nice to see that. But the average Nigerian has a particular mentality about cars. They're always asking about second-hand value. Does this car have second-hand value? Are they going to be able to trade it after they've used it for a while and all of that? And, when it comes to cars, made in Nigeria cars, and I'm wondering, how are you going to make Nigerians change that mentality? Because it's not just the federal government that's guilty. We all are guilty at the end of the day. We're all driving cars from abroad. So how do we change that mentality? How do we prove to the Nigerians that cars made in Nigeria can have second-hand value?
So, like I mentioned, the quality is not the problem. We have a lot of top customers, at least for Nord, I'll speak for Nord, who love our vehicles, and they're always coming back to buy because of the quality, the durability, the reliability, and the cost-effectiveness of our vehicles.
We're going to come to cost very soon, but continue.
So now, when the quality is there, now the question of second-hand, like you mentioned, the word second-hand, that is after the first person has bought it. Now, to have a second-hand market in Nigeria for Nigerian-made vehicles, you first need to have the first-hand market. Now, but we have a country where we buy about 500,000. It's a big, big market. No matter how small you look at Nigeria or talk about our economic issues, Nigerians still spend. Last year, we spent about 6% of our imports were vehicles and motorcycles. So that's about maybe 3.5 to 4 billion US dollars. That's the size of the market. But the sad story is that less than 3% of that market are brand new vehicles. And even lesser are vehicles made in Nigeria. So we need to, first of all, solve the problem, which can start from the government. Look at anywhere in the world. The Apple, Intel, Tesla, you have the government to support. The government has to be the biggest supporter, biggest investor of these industries in their early days. You cannot have the America you have today without the US government sponsoring and buying from these industries.
I know Tesla is one major example of that.
Tesla, Apple, Intel, all the biggest companies in America. When they were trying to win the USSR in this war, when the USSR launched Sputnik in 1958 and 1957, and they had to respond, and they created what we have as NASA today. They created young companies. That's where all these, like the likes of Intel and the rest, came about. Young companies who were winning billions of US dollars of contracts from the US government to develop that industry. That's why you have Silicon Valley today. So you have to, in the early days, support your country. Because if you don't, nobody else will. Then after the government has done that, just imagine, the impact it would have on our economy if the vehicles that the National Assembly bought and the vehicles that every parastatal in government buys are made in Nigeria vehicles. You know the amount of jobs it will create. Because
looking at the supplementary budget, everyone's talking about that at this point. We're seeing about 2.5 billion there earmarked for car purchases. And I'm wondering, are you guys going to get any action from there?
So that's what I'm saying. So vehicles are needed. We're not using horses anymore. So you need vehicles to move from point Alpha to Bravo.
Now, are you marketing to the government at all?
So if you want to buy vehicles, and I understand that it's needed, I think it's what I'll call the low-hanging fruits. Just ensure that all the vehicles that you buy are vehicles made in Nigeria. Because at that point, you now create more jobs. You cannot keep exporting our jobs and create out of Nigeria. Because when you buy fully built vehicles, you create no job in Nigeria. But for us, for example, we do maybe roughly over 100 units a year. but we have about 60 direct staff, and another 100 plus indirect staff. I know people doing 5 times, 10 times more revenue than us, but because they bring in the vehicles from abroad, and they have probably less than 7, 8 staff. You create, when you make things, you have to create jobs.
Break down the value chain for us when it comes to car manufacturing here.
Okay, I'm going to summarize it. So it starts from the idea, the concept. Okay, what do you want to create? So after that, you go into your R&D, which is one of the reasons why we set up an innovation and R&D center inside the university campus, one of the biggest in Africa. I think the first time in Africa. Set up a very big R&D center inside Unilag because we didn't want to be doing our R&D outside Nigeria, maybe in Germany or Thailand. Save the FX here in Nigeria. You know, provide that link between the industry and academia. So after the R&D, because you need to be able to compete and provide safe vehicles, so you need to continue to research and develop. Then after that, you go into the manufacturing, which is where I'll call it the supply chain, where you decide, okay, what do I buy? What do I make myself here? So you decide, okay, I'll buy this, I'll make this. Then after that, you move into the assembly line. So you make the vehicles. You know, that's where the vehicles are put together because all the things you've either made yourself, or for example, we make our plastic parts ourselves, our grills ourselves. We buy the engines, we buy the steel. You know, then you bring all those things to the assembly line. Then you assemble them. After you assemble them, you do the testing to be sure that it is good enough for the market. What you did is good, and you put the warranty on it. Then after that, it goes to the showroom. Then after the showroom, you sell to the customers, and you move to the after-sales, which is where you need to have workshops and the rest. And Nord, for example, we have 14 after-sales locations everywhere in this country, one of the widest. So when you buy our vehicles, you know that you will always get the after-sales. That's why I always tell people, when it comes to merit, we would always win. You can ask our customers, we would always win because we produce very good.
I'm talking about inputs at this point. We've all been talking about the Naira at this point, the FX, you know, distortions in the market at this time. And definitely you need inputs, and some of them are imported, definitely. Yeah. Talk to me about how the distortions in the FX market is impacting your production and pricing. At the end of the day, because all of these, you know, add to the price issue. I've heard many times you say, oh, this can be produced in Nigeria, that can be, but my problem is, when it comes to pricing, you're competing with the same price if you're importing. So I'm like, how do we find that balance there? Affordability.
No, so you asked 2 questions. Right. I don't know which one to answer first.
Both.
So, so first of all, we don't compete with the ones that we import. Our vehicles, at least for Nord, for the same quality, a lot of our customers can attest to this. For the same quality, you get a durable, affordable vehicle for half the price. So when you buy a Nord vehicle, you're getting that vehicle that you can get in Japan, for example, but this time around at half the price because we're using the same parts, the same quality, the same transmission. But because we make a lot of things here, a lot of the factors of production are in Nigeria, the price is really reduced. Now, so when it comes to pricing, no, we are like half the price for the same quality. Now, going back to your first question on the FX. Now, we source about 68, 67% of our parts in Nigeria. So we need to still get some parts from outside, and the main part of it is the steel, because we don't have the flat sheets in Nigeria.
Right.
So we have to import those sheets into Nigeria, and that, in my opinion, represents about maybe 40% of the value. So we need to get FX to do that. But we're working on some things to ensure that we're working with some other people to get.
So the FX distortions impact you?
Yes, I'm going there.
Yeah.
Yeah, so we are working with some people, maybe 3-4 years, you know, to work with the iron ore company, work with the Delta Steel, to be able to make our own steel here in Nigeria. And when we do that, the price of vehicles will drop by about 30%. But right now, we still have to source these parts from outside Nigeria, the steel, for example, which means we need to get the FX, which affects us because, and the biggest problem with this FX issue for us is that we cannot offer credit. This is the biggest problem. Why is, if we say, okay, this vehicle is 10 million naira, come and take this vehicle and pay over a period of time. Let's say, pay over a year. In a year's time, the value of that, because of the devaluation of the naira, would be washed away. So you have more or less made a loss from selling on credit or selling with a prepayment plan. And I think that we have to find a solution to that, because a vehicle is usually the second most expensive thing anybody will buy after a house.
Right.
So I think the right thing to do is to find a way to have a payment plan.
All right. Talk to me now. What would you like to see from the government right now to support this made in Nigeria industry? That's for cars. What would you like to see from the government? Because at the end of the day, we talk about, oh, the government has to lead and all of that. But I also want to know who is demanding more from this industry. Is it the individuals or the government? Which one? Who is demanding more? And what would you like to see from the government?
For my company, the biggest market is still the private sector. The banks, the transport companies, the real estate companies. The government is growing. We have some government contract, like Ogun State government, for one, is a very big customer. The federal government, like the police. So, but still not compared to how much more we sell in the private sector. However, at the stage of the auto industry, between the government and the private sector, those that can champion it now is the government, because the industry is still very young. Nord is 7 years old. We can't compete with 100-year-old companies, 80-year-old companies. So we will need the government, like how it's done anywhere. Tesla did not get to where they are without the support of the US government. So we're going to need the government to do two things. Number one, buy from us. Create policies that would provide the incentive for people to manufacture vehicles more in Nigeria. Because right now, the incentive to manufacture more vehicles in Nigeria is not really there. It's more, people make vehicles more in Nigeria now, more from a place of patriotism. Because the rate, the tariff is almost non-existent, like there's no difference. There was a big difference in 2014 when the plan was started, but in 2020, it was washed away, which I think should be reversed, because this is a market that does between 3.5 to 5 billion US dollars a year. It's a market that can create millions and millions of jobs. It has to be supported. It has to be backed. And it's the government at this stage that has to back it.
Right. So what would you like to see when it comes to, incentives, at this point?
Okay.
We've talked about, supply side. There's also a demand side, because Nigerians are squeezed, at this point on all angles. We have a cost of living crisis at this point. What can be done, and how can they get that funding?
Okay, so very, very, I like the question a lot. We have a very vibrant auto industry with very brilliant people, dedicated entrepreneurs. Now, what we need the government to do is to increase tariff for brand new vehicles. Now, we made a mistake. I'll say a mistake. I'll call it a political mistake, where the tariff was increased in 2014. And in 2020, some people decided to fight it. And they say, oh, poor people are complaining because they cannot buy vehicles. And I asked them that, and I felt that that was just a way to just kill the entire industry, because they want to keep selling to Kumbo cars. So I've spoken to a couple of my colleagues in the auto industry and said, okay, let us go back to the government, which is what I hope they can hear me now, and say, okay, you know what? Make a policy that protects the poor people, the middle class. Don't increase the tariff for vehicles that are not brand new, for vehicles that are 4 cylinders. Increase the tariff, the levy actually. Increase the levy for brand new vehicles that are 2 years, 3 years old, for those that they can really afford it, and vehicles that are like V8 vehicles. Increase the levy. Then that levy, first of all, you now discourage people who want to buy vehicles just because of the brand. Because I've already assured you that the vehicles are as good, and most people that buy it know that they are good. The problem we have now is the branding. So if you want to buy a vehicle, even when you know that the quality is good enough, just for the branding's sake, okay, then buy it, but pay the levy. If you are buying a brand new vehicle or a V8 vehicle, then pay the levy. Then that levy would go to the NADDC, National Automotive Design and Development Council, which is our regulator and the agency responsible for developing the auto industry. Now, that levy, we talk about funding, is the money we're going to be using to, one, develop the auto industry, create R&D centers, a lot of things, one. Two, provide very affordable financing, loans, to authorize assemblers. Because we're competing with giants that have very, very affordable loans, credits. So provide it so that we can compete with the giants all over the world and maybe very soon start exporting to Europe. Right. You know, provide this low interest rate to the assemblers, which is one side of the equation, which is the supply side. So we can supply better and do better like the rest of the world. So much. The other side is now the demand side, which is you now provide that same low interest loan to those who want to buy the vehicles. So you're solving a problem from the supply side. Suppliers, which is we, have the money to do a lot with low interest rates. We also have people who want to buy. So you want to buy a brand new vehicle now. You just say, okay, you can buy it, but if you buy a brand new Nigerian-made vehicle, you have a very, very attractive interest rate. You see everybody will start to buy these vehicles. And over maybe 3, 4, 5 years, you have to be patient. You now have what you now call the second-hand market. Because people, after they've used it, they love it. Then it'll be a second-hand market. So much to unpack there. Regrettably, we've run out of time at this time. Thank you so much, Mr. Ajayi Oluwatobi, Chairman and CEO, Nord Automobiles Limited. It was great having your perspective today. Thank you. I hope everybody buys Nigeria going forward. Thank you so much. Thank you very much. I'll take a quick break now. We'll come back. Commodities Market Update is next. Do stay with us. And it's a rate-setting season. Let's get a sense of a U.S. Fed decision yesterday. Let's talk to Victoria Momo, Senior Analyst at Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning. Thank you for having me.
All right, talk to us of why you think the Federal Reserve decided to keep the interest rates steady yesterday.
So against expectations that there could be a possible rate hike, we saw that the U.S. Fed actually, held the benchmark interest rates. And the reasons for these are basically, the slowdown in inflation in the U.S. economy, as well as strong economy. So basically, there's like some level of stability in the U.S. economy. So on the back of those reasons, we saw that the U.S. Fed actually decided to hold on to or hold the benchmark interest rate. But one thing that most likely might interest you to note is that even though the interest rate was held at the current level, it's actually the highest in 22 years. And it has, implication on, the global economy and even the U.S. economy. And that is because, the U.S. economy is actually the largest economy in the world, and the dollar is the most tradable currency in the world. So we could see the impact of this high interest rate, reflect in, countries like Nigeria and other emerging markets that has, huge dollar-denominated debts, and that could increase, the debt service payment and also reduce the amounts that would be available for, these countries to actually use, especially Nigeria, would limit the foreign exchange that could actually be used to support the naira, and this would even weigh on the naira. We also have the impact of this interest rate on commodity prices, because most of all these commodity prices are actually priced in dollars. So there is an impact of the rates on these commodity prices. For example, oil. Prior to the meeting yesterday, investors were kind of skeptical about the U.S. Fed decision, and most of them were looking at a possible hike in interest rate, which could weigh on demand, demand as well as the price of of Brent. So we saw like a decline in Brent prices, but as of today, the prices have increased again, owing to the sentiment that prices is going to increase further. And then we have the issues of the Israel-Hamas war that is also affecting, that could pose a threat on supply and would also keep the prices of oil, elevated in near term. So what this means, for Nigeria is the fact that oil is actually our major export commodity, and when there's an increase in price of Brent globally, we could see more earnings into the country. But on the other hand, there is the issue of subsidy, which would increase and even pose more burden on the federal government, and also weigh on the foreign exchange that could be used to support the naira.
Talking about supporting the naira at this point, how is this decision, impacting currencies in Africa and especially the naira at this point?
Like I said, the interest rate hikes, the interest rate that is being held is still at elevated level, and is actually, having impact on, the countries that actually have, debts in dollars, and that is weighing on the ability for the country to actually service the debt. So this weighs on the external reserves, and once the external reserves continue to dwindle, we will see, limited, ability of the CBN to intervene in the foreign exchange market. So that has actually, weighed on the naira and caused the naira to actually depreciate. Apart from that, we've also had issues about, the sources of forex supply into the country, which is also limited and restricting the CBN's ability to, defend the naira. And there are speculative activities going on because the issue of lack of clarity as regards, the sources of forex supply. I mean, few days ago, we heard that the federal government would get, $10 billion foreign inflows to support the naira. But I mean, it's a temporary solution, and most people have actually, returned back to normal because there is that, lack of clarity as to the medium to long-term plan of how you are, willing to sustain, the naira. So that speculative activities coupled with forex shortage is actually weighing on the naira, and this is also impacting the domestic prices of commodities. We've seen, imported commodities, rising, like flour, sugar. They're rising because of the exchange rate pressures, and even other commodities are also, being impacted, especially, rice, beans, and this is due to the fact that there are logistic challenges despite the harvest season, which is expected to taper prices. So the inflation numbers would likely, come out on the 15th of this month, and we're likely to see, elevated inflation levels.
Right, definitely. We're looking out for that, for those numbers. But let's talk about the domestic commodities market now. Are prices stabilizing at all?
So prices are still sort of elevated, and this is contrary to the expectations that when we are in the harvest season, we would see prices actually, declining because there will be a boost in, the supply of these commodities. But it's actually, the other way around. And like I said, there is the issue of, currency pressures that is actually weighing on these prices because we need to import, and we are now using like, more naira to actually, get dollars that we use to import these commodities into the country, and that is being filtered into the domestic price of these commodities. And then in terms of commodities that are produced locally and all, we're having the issues of logistics. I mean, these commodities are being produced in some other regions, and the cost of transporting these commodities from those regions to where they are actually needed, those are the destinations. You see that they factor that prices into the domestic commodity prices. But I would also like you to know that cocoa has also been facing challenges of production, and that is also going to impact Nigeria's revenue earnings, because cocoa is one of Nigeria's majorly traded agricultural commodity. Right. And this is due to the fact that production is declining in states like Ogun State. The weather condition is affecting it, so we don't expect like bumper harvests in those regions, and that is affecting the production, and it could actually weigh on the country's earnings from cocoa.
Yeah, quite a domino effect there. Thank you so much, Victoria Momo, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you for having me, Ladi.
All right, for an opening call to the market now, we have Will Ebong join us right here to give us the details. Will, great to have you.
Yes.
Looks like you came back from that vacation to an incredible rally right here on the NGX.
This is an all-time high, Ladi.
Right.
70,000. You know, we talked about this yesterday, that it was going to cross. I was hoping it was going to cross.
And it did cross.
It crossed at intraday, sustained it at the close of the bell, and here we have it, hoping that investors keep jumping and riding that wave and keeping it up. You know, let's hit more highs. So I'm just waiting for that champagne, the champagne you promised that was going to pop.
Maybe we'll do that 80, maybe 80,000 if it gets
80,000. Yeah, now we're moving
I'm shifting the post.
You shifted the post.
Right.
Now more challenges ahead now. So we're seeing it jumping yesterday, 1.94%. It sent shockwaves as the NGX described it to the financial community. Investors are on a frenzy right now. 70,000 point barrier broken. That's a remarkable milestone that has stirred up excitement about the investors. And I am, for one, I'm very excited. Now let's see the market cap yesterday. The banking sector up yesterday 2.26%. Consumer goods down, however, 0.14%. We've seen Boa Foods, actually dampening that industry. Now industrial goods unchanged, but in the negative territory. Insurance was down, up yesterday 3.73%. Oil and gas unchanged from its opening levels on Tuesday. Now let's see what we have for the volume and value. Yesterday, volume jumped 24.51%. Now, value was also up 82% to 11 billion naira, and deals, however, was down 7.25% to 7,445 deals. And we're going to be talking to our analyst, Abdurrashid Momo. Okay, yeah, I understand Abdurrashid is not ready now, but we're looking at top trades yesterday. UBA up there yesterday, leading that pack, 163.56 million units traded. And we also have FBN Holdings following suit with a 94.565 million units of trades, of the stocks traded yesterday, and GTCO also in that pack of 45.75 million units. Now, we're seeing these recent peaks, and it's moving on. Let's look at the NASD, how they performed yesterday. However, they were in the negative territory, 0.35% down. NSI, that's the index, is at 828.09 points. We see the market cap still teetering between 1.12 and 1.13 trillion naira. Let's look at the volume chart for yesterday. About 411,000 shares traded yesterday, valued at 45.53 million naira. That's a whole lot for the market. And deals 18, and we have stocks traded. 9 stocks traded in yesterday's trading session. We have Abdurrashid Momo now, equity trader, TRW Stockbrokers, to give us more insights as to what drove this frenzy in the market. So good morning, Abdurrashid. It's good to have you. Now, we're seeing this recent rally, Abdurrashid, the recent peak in the stock market. Is it a mere flash in the pan?
No, not really. As I always tell people, market moves in waves. The first thing I said that the market has been in the consolidation mode. The market was flat for about 2 months. We're looking at the period of September to about October, and we finally saw the breakout. What happened was, after we broke the all-time high, right, about 6,000 points down, we now went about 68,000 points. So the market tested that level twice, and I think by the beginning of this week or towards the end of last week, the market finally broke out. And this breakout, we expected it because you can see from the chart, what it normally tells people is that when there's a sign of consolidation, there's bound to be a breakout. You can see from the period of September, October, actually, we had the longest consolidation, which market finally broke out. So what we are seeing more now, technically, is what we call an ascending channel. So prices are moving higher highs and higher lows. And we can see key support and resistance levels. We're actually within a resistance now, but it just tells us that there's still likely to be room to the upside in the long term.
Thank you so much, Abdulrasheed. We really out of time now. I know I had a lot to ask you today, but we'll probably do it some other time. Thank you so much for joining us on the program and sharing those insights. We still look forward to hitting more highs. 80,000, Laddie has put up that challenge, and we'll see. We'll definitely pop a champagne after that. Thank you so much, Abdulrasheed Momo.
Thank you very
Equity
much.
trader, TLW Stockbrokers.
Okay.
So that's it for the market. It's finally, Laddie, we're seeing that, we did talk about that double top we had, before we had that breakout. And you're seeing it with projections, for more uptrend there. So the sky, I don't think, is the limit, or is it going to be our limit?
Because normally when you see a double top like that, the sentiment next should be down, all the way down.
Yeah, because
but somehow it managed to
break that barrier.
Back up there and break that resistance zone that was set up right there. Quite interesting. The charts are quite interesting to read, and yeah, not easy. I keep saying it, not easy getting to a bull market.
Not easy.
You just feel like you're buying the top at some point.
Yes.
Risk management, very necessary at this point. Thank you so much, Willie Vaughn, for giving us the details there. All right, now, let's get a check on what's happening in London now. It's still earnings season, and we have new reports from the UK. Juliana joins us from our London studio to bring us all those details. Great to have you, Juliana. So we see British oil giant Shell today reported $6.2 billion profit for the third quarter, roughly in line with estimates. It looks like it's higher oil prices doing this again.
Good morning, Laddie. Yeah, roughly in line with estimates, but still a 34% drop on Q3 quarterly earnings compared to what Shell was reporting last year. And you're absolutely right, we're bang in the middle of trading update season, but I think Shell's data today does signal the end of the West's biggest oil and gas producers updating shareholders on what's been going on between July and September. And it hasn't been favourable for them, actually, because, of course, this time last year, the world was reeling from the effects of the Kremlin invading Ukraine. And, of course, we saw extraordinary profit updates from the likes of BP and Shell. That hasn't been replicated this time around because we are starting to see an ease in the commodity prices. However, unlike what we saw with BP, who reported last week, I believe, Shell have actually benefited from LNG output. So they've done better than expected, which is why I think their shares are up 1.4% on the FTSE 100 this morning. But yeah, certainly a massive difference from what we were seeing this time last year. But then, of course, we now have a significant war in the Middle East, day 6 of the Israeli ground invasion. So let's see what happens to commodity prices then and whether or not this is going to impact the profit margins for Shell and BP when they report at the beginning of next year.
All right, we're still expecting more reports come out there. We'll keep tracking them as they come out. But obviously the AI Safety Summit still on in the UK, and Elon Musk set for Downing Street talks with Rishi Sunak. That's happening today after the AI Safety Summit. Give us an update there. What are we expecting?
Yeah, you're right. Day 2 of the world's first Artificial Intelligence Safety Summit, which, as we know, is being hosted by the British government, led by Prime Minister Rishi Sunak. It has actually gone down pretty well. We've got hundreds of world leaders here, including, as I was saying to Will yesterday, the Honourable Minister for Information, Innovation and the Digital Economy, Honourable Bosun Tijani. He gave a speech yesterday. We also heard from artificial intelligence experts and those within the sector. I think yesterday was pretty much about them giving their statements about where they see their nations in the fight with and against AI development. And I believe at the end of yesterday's gathering, there was some sort of Bletchley agreement signed between about 27 nations. So next year, the baton of delivering this summit is going to be handed over to Paris. As you said, the big thing today is going to be some box office discussions between Prime Minister Rishi Sunak and Elon Musk, the world's wealthiest man. He is in town for this summit, and he's a major stakeholder in artificial intelligence. So, yes, it's been great. I think there are obviously now questions to be asked. A lot of people believe that, by allowing major tech heads to be involved in what is going to be AI regulation, that perhaps it's allowing them to tick their own homework, that we need to not just be thinking about the existential threat, which is in decades and centuries to come, but we should actually be thinking about what AI is doing now. So it's raised loads of questions, but it's a good thing, and certainly I think Rishi Sunak and Britain have cemented and solidified their position as the world leader when it comes to AI safety and regulation.
Right, we'll definitely be tracking and see how it all ends today, and the meeting, that interview between Rishi Sunak and Elon Musk. Elon Musk in town. Thank you so much, Juliana, for the update.
Thank you.
All right, let's get a check on all the markets now. See, still bullish sentiment, just like we have right here in the NGX. See the crypto market still looking quite bullish at this point, with Bitcoin remaining well a bit above the 34,000 support zone. If you see the color right there on the screen, it's all green, all green, all green. Just 2 pockets of red. Nothing to see here, just 2 pockets of red, but you see the sentiment right there in the market is all green. Very, very bullish market is what we're seeing right here. It just seems like all the geopolitical tensions and all of that, all the headwinds, macroeconomic, global headwinds, are not impacting most of these markets. The markets seem to be doing pretty well at this point. Let's see the sentiment right now. Let's see how greedy the market is. Yeah, quite greedy. 72 points over 100. We're at the middle part most of last month into about 2 months ago. We even got to fear, but now from nowhere, the market has flipped all the way to greed, 72 points. Wonder where it's going. Maybe extreme greed next. Who knows what's going to happen? Let's look at the top cryptocurrencies we track now. We see Bitcoin this morning, 8 a.m., 35,000, holding above that level, 2.05%. We see the biggest mover this morning, Cardano, managing to get back above that 30-cent level, 5.68%. And we see another big mover here, XRP. It was more like a stable coin at that 50-cent level for the longest time. We're seeing it right now at 60 cents, breaking a new level. So we're seeing most markets now breaking new levels, new resistance zones, 3.32%. That's what we're seeing, the jump there for XRP. Let's bring in Michael Naji now, financial market analyst. Hello, Michael. Good morning.
Good morning, Laddie. Thanks for having me on.
Yeah, Michael, this market looking really, 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 really green at this point, and definitely you're wondering when's the ball going to drop at this point. The market is really greedy right now, about 72 points from the middle of about 2 months ago. It was in the middle. We didn't know if it was fear or greed, but now it's definitely greed. What are you seeing?
Yeah, so the markets is the Bitcoin markets are showing signs of life and renewed investor interest. We've seen Bitcoin rally and other altcoins rally. Some making moves of almost upwards of 100 to 200% in this short period of time. But basically, Bitcoin has been down and it's been suppressed. It's like a ball underwater. It's been pushed down and shoved down and tried to be held down for so long. And now the pressure has to be released. It has to mean revert to the other side. And that's what we're seeing here in this move to probably 42 or 43K. This move will be at a bare minimum. I don't personally believe it's the absolute start of a new bull market, but I do think that this move is the beginning of the end of the bear market. So the bear market is not quite over yet, but this is one of those signs that points that, the downtrend, the months of just going down and down and down might finally be over.
What would you say is the biggest risk to this uptrend we're seeing right now in the market? We still have Sam Bankman-Fried there. He's still being drilled dead, caught, and he was on the verge of crying last I heard. And we still have SafeMoon execs charged with fraud. So we're seeing some other, headwind kind of news still in the market, but the market is still, rising. What risk are you seeing on the horizon?
Yeah, so in regards to Sam, it's been a whirlwind of a case. He took the stand to defend himself because, honestly, his case just looks so bleak, and that's his best line. However, though, Sam on the stand got grilled. His performance was good on some days, bad on most. However, he took a defensive "I don't know," which, was good and in regards to protecting himself. and his lawyers tried to redirect him so that with questioning, so that he could make his own case as to why he isn't totally complicit for this entire thing. And so you're probably going to see the judge come down really hard on Sam, because I don't know defense will not stand. They're going to try and make an example out of him, and as well on the UK perspective, you're seeing them say that next year they're going to have regulation, mostly focusing on KYC, stable coins, and the issuers of these altcoins. So that is a risk that we face on the horizon because the UK has put a date on it at 2024. So you're going to see a bunch of new regulation coming in to protect investors, as well as with the Safe Moon fraud. People can just come in and make these projects and commit all kinds of fraud in the process, pump and dumps, embellishment of the funds that are supposed to be used for the organization. So many things that you wouldn't see in regular markets fly in crypto, unfortunately, because of the lack of regulatory oversight. So you're going to see that change. However, though, that is good for the market, because once we clear out all that nastiness and potential risk for investors, we can now move higher, and then you can see things like the ETF come in, and you can have more growth and have institutional players come in and feel better in the space.
Right, I guess more regulation is needed. I'm sure we're going to be seeing more of that going into 2024. Thanks so much, Michael Inaji, financial market analyst. Thank you.
Thank you, Lenny.
All right, let's look at the top gainers there. We see Celestia, one of the new ones there. $2.75, top of the counter with a big double-digit gain. Really green market, 21.57%. Aave, that's a DeFi protocol there, $97.92, almost getting to $100, 20.24%. Uniswap there, and Mana Decentraland, that's from the Metaverse, one of Metaverse plays in the market, 39 cents, 11.90%. So we're seeing double-digit gain. Let's look at what the losers counter looks like. So single digit, marginal drops there with XMR and Leo topping the counter. Theta, that's 75 cents, 1.15%. So we're seeing single digits, marginal losses this morning with the top 100 cryptocurrencies we track in this market. So that's how the markets are looking. Really bullish markets right here. And that's it on the show today. Thank you so much for watching. Don't forget, you can visit www.channelcv.com for more updates. And don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you again for watching. I'm Ladi Williams. Have a profitable day.